This is Gustavo Pifano, a research analyst with Gabelli Funds, and today we're taking another look at the UK bookmakers. As we've shared in the past, the technology and expertise to run a competitive bookmaker combines intensive actuarial skill with e-commerce and specialized retail capabilities. Given the immediate interruption to these companies' business models from the coronavirus-induced moratorium on professional sports across Europe and the US, we believe the value of this intellectual property has been cast aside and UK bookmaker stocks have sold off dramatically to levels we view as oversold. Sports will be back, and as the US betting market matures, we believe the value in these established operators will be realized again. We remain cognizant, though, that beyond a prolonged hiatus to sports, a cash-strapped consumer in the near to medium term and the potential for Parliament to lower online betting limits to £2 do still remain as risks. William Hill has 874 million shares trading at 65 pence for a £560 million market cap, has 437 million pounds of net debt, 7 million of minority interest for a 1 billion total enterprise value. The company generated 270 million pounds of EBITDA on 1.6 billion pounds of revenues in 2019. William Hill derived 53% of its 2019 group revenues from sports betting and expects a 2020 EBITDA reduction of 100 to 110 million pounds due to the disruption of coronavirus. Beyond the UK, William Hill are market leader in Nevada sports betting and are rapidly expanding into new US states as sports betting becomes more widely legalized. They've partnered with Eldorado Resorts to accelerate this market access and have also signed a media deal with CBS Sports, which will strengthen its brand awareness with US sports fans. GVC Holdings has 582 million shares trading at $5.15 for a £3 billion market cap. It has 1.7 billion pounds of net debt, 43 million pounds of minority interest for a 4.7 billion total enterprise value. The company generated 761 million pounds of EBITDA on 3.6 billion of revenues in 2019. It derived 45% of its 2019 revenues from sports betting and expects a 2020 EBITDA reduction of 175 to 200 million pounds due to coronavirus, plus additional losses given the enforcement of UK shop closures for at least 3 weeks. GVC is the largest online-led sports betting and gaming operator in the world and have partnered with MGM Resorts for their market access into US sports betting. The GVC MGM joint venture, Roar Digital, has a deal with Buffalo Wild Wings, which has 1,200 plus locations across the US to allow for in-restaurant gaming. We believe this partnership is particularly attractive in states which may take a tethered approach to regulation. Roar's media partnership with Yahoo Sports also creates a valuable window for customer acquisitions, leveraging Yahoo's fantasy sports database. Once again, I'm Gustavo Pifano, and thank you for watching Gabelli TV.